Hello, traders. Gary Wagner here with the gold forecast, 27th day of January, about 11 a.m. in Honolulu, Hawaii on Thursday, and this is the daily report. Gold is under significant pressure this morning, trading off between $33 and $35 lower, currently trading at 13.13, 13.11, 13.12 in that area. I did send out a special email this morning. The email suggested that we take any long positions and stops in the market to the market, meaning to exit the trade. Let me show you what I was looking at as I watch the market through the night. And I do chart the markets roughly every 3 to 4 hours, even during the night session. I'm constantly monitoring them. We had a critical point. That critical point, of course, was this area right in here. When I saw it go close to that area and actually breach that, and that's significant because it is the 38% retracement level. It is a retracement level from this entire last wave back from the end of July all the way up. When I saw it break this one area, my sentiment was if this area here will not hold, then the logical point is for it to continue to trade lower. I do believe that this sell-off is solidly a technical sell-off. I do believe that this sell-off is a correction. As I stated the other day, I do believe corrections are healthy. But at the same time, we need a much stronger indication that this correction has ended, and right now it is quite obvious that it has not. Another way to look at this support band that I believe was absolutely broken, if we take a look at, this is a basic box chart, but if we take a look especially at these sets of lows right in here, as we draw our arrow through there, as you can see, right at this point, this 1320, that's why when we entered the trade the other day, I took a look at the stop. I wanted to give us some wide protection, but when I saw it break through there, I really wasn't willing to risk more than $20 on this trade. And the fact that it had broken so drastically through what I consider to be extremely critical support in this area, that there was no option but to exit the trade. Where do we think this market is going? Well, the next logical point is going to be to look at the 50% retracement of this move. For that, we'll go back to our candlestick chart, and again, as you can see, it's a simple Fibonacci retracement, and 1294. 1294 is a 50% retracement of this last move. And what I want to do is look at, in the same way that we did the other day, a comparison of the last couple of retracements, because on the last major correction that we had, it only went to about the 38% level. But as we talked about, I believe this was on Monday of this week, we talked about the fact that the correction that we saw as the market hit highs back in 09 December to February 10, that long correction, I think we are witnessing something a lot more similar to that exactly 1 year later. Let's take a look at that. Traders, again, all I am doing is we're looking at this particular correction. Once again, this is when we hit that first contract high. All I have done is created what is called an auto-scaling line, which means that as we move it, it will scale to the same dollar amount at any point in the chart. We're simply going to move that over. Let's get some room here so that we can take a look to see what kind of correction we could be witnessing if that correction was the same as we saw back in December through February of last year. That would take us much, much lower. That correction, if we compare that to our current correction, took us to about the 1240 area. Now, if we take a look at our Fibonacci levels and extend them even lower, we can see which numbers would match with that. So simply all I've done is added some lower Fibonacci numbers, and as you can see, 1261 would be a 61% retracement of this large move. Do I believe that the market is going to retrace this hard, that the correction will be this deep? One, I don't know. But I can tell you that the numbers and pivot points that I was looking for were either 1294 or 1326. We've talked about that before. It's quite obvious at this point that the market was unable to hold and sustain any kind of support in this area. Obviously, it seems that the next logical point is going to be around 1294. We will have to take a look at it if, in fact, the market continues to drift lower and if the market finds any kind of support there. I do believe that we are still fundamentally bullish, but I also believe that we have found our first, what I'll call, deep correction since the correction of December 2009 to February 2010. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekend review. Bye-bye.